Today on Market Lens Pro, we're diving into Joby Aviation, one of the boldest bets on the future of urban air mobility. Toyota has invested over $500 million into Joby since 2020, not just as an investor but as a key manufacturing partner. None of Joby's rivals, not Archer at a market cap of about $2 billion, not Lilium near $1 billion, not Volocopter, which remains private, can claim that kind of industrial support. In 2025, Joby announced a $125 million deal to acquire Blade Air Mobility's passenger business, giving it control of more than 10 heliports and terminals in New York and Europe, plus access to Blade's 300,000 annual helicopter passengers. Joby also achieved its first airport-to-airport flight between Marina and Monterey, California, a critical milestone showing the FAA that its aircraft can integrate with existing air traffic systems. The potential ahead is enormous. Morgan Stanley projects the urban air mobility sector could exceed $1 trillion by 2040. Joby's aircraft carries 4 passengers plus 1 pilot, with a maximum speed of 200 miles per hour and a range of 150 miles. That means cutting a 90-minute drive into a 15-minute flight. The company has also tested noise levels below 65 decibels during takeoff, quieter than a dishwasher, giving it an edge in community acceptance. And with Blade's network, Joby gains access to hundreds of thousands of customers already paying for premium short-haul flights. Of course, there are risks. FAA certification is still in progress, and Joby is only at stage 3 of 5. Cash burn is heavy, with $500 to $540 million expected in 2025, against $991 million in cash, less than 2 years of runway without new funding. In 2024, Joby generated just $136,000 in revenue, while posting a net loss of $608 million. Competition is fierce too. Archer aims for 2025 launch, Volocopter targets the Paris Olympics, and Lilium is pursuing a jet-style eVTOL. On the market side, Joby trades around $9 to $10 a share, with a market cap of about $6.5 billion. Analyst targets hover near $10 to $11. That's a premium to Archer, which sits closer to $2 billion, and reflects Joby's stronger partnerships and faster FAA progress. Some bulls argue that if Joby captures even 5% of the projected trillion-dollar market, the stock's valuation could multiply. Looking to the week ahead, investors should brace for volatility. The stock recently surged over 13% on strong trading volume. Positive catalysts such as new FAA updates or fresh news on Blade and Uber integrations could push shares higher, with bullish sentiment carrying Joby towards $17 to $19. A neutral week may see the stock consolidate between 15 and 17, but if sentiment turns negative, Joby could slip 5 to 10%, falling back toward $13 to $15. In the end, Joby is not the only company chasing the air taxi dream, but it may be the best positioned. With Toyota's $500 million backing, Blade's passenger pipeline, quieter and longer-range aircraft, and earlier FAA progress, Joby holds advantages that its competitors lack. Yes, the risks are real: certification delays, high burn rates, and a crowded field. But if Joby executes, it could lead the trillion-dollar urban air mobility industry and redefine how people move through cities. For long-term investors with patience and vision, Joby Aviation represents something rare, a speculative stock with the potential to become the Tesla of the skies. You're watching Market Lens Pro, smart stock insights in 60 seconds and beyond.